As we move towards the end of summer, the dollar is on the highs of the year, but FX markets in general are in a kind of twilight zone ahead of the first Fed tapering that we could see announced potentially in September this year. At the same time, despite these growing expectations of Fed tapering, we are seeing increasing fears about the global growth story, particularly what's happening in Asia, the Chinese slowdown, and the spread of the Delta variant. These fears about growth are weighing on commodity currencies and weighing on Asian currencies in particular. In this twilight trading zone, we are seeing local stories starting to win through. Now, those central banks that are undertaking front-loaded tightening, such as Brazil and Mexico in Latin America, and in Europe, places like Russia and the Czech Republic, those currencies are outperforming, and we should continue to see further outperformance there. And those currencies where central banks are still keeping interest rates ultra loose, and clearly we'd say the Eurozone and Japan, those currencies continue to underperform. What seems clear, however, is that FX markets will heat up over the next few months as we get more clarity on Fed tapering and also the size of the Asian slowdown. For us, 650 in dollar renminbi is a major benchmark for FX markets in general. Our preference probably would be for defensive positions because of this uncertainty and because the volatility is very low. And what this means for euro-dollar, one of the big benchmarks in global FX rates, is that this support level at 117, the figure will remain under pressure, and there is a risk that we move as low as 115, maybe 114 over the next couple of months.